Welcome back. You're watching Startup Street. Now, Oister Global, which is an investor in the VC and PE fund ecosystem, today announced that its assets under management have crossed 100 crores in December, and it is now targeting to hit that 1,000 crore AUM mark in 2024 itself. It plans to invest in about 20 more venture capital, venture debt and private equity funds over the course of the next 18 months. To talk to us about this new fund and the plans ahead, joining me now is Rohit Bhayana, the co-founder and co-CEO at Oister Global. Rohit, welcome to Startup Street. Barely a year old now, Oister Global. Give us a brief overview of the company and what your investment thesis is.
Thanks for having me, Ritu. It's been an exciting year for us. We barely got off the grounds in August last year, got the technology, got the platform going, and then got collaborating very deeply with SEBI on the various funds we wanted to invest in. And then over the last 3 months, from the time we decided to make investments in the space, we have deployed about 100 crores. Actually, it came and went. It was quite interesting when a colleague of ours walked up one day and said, "Hey, do you realize, good morning, it's also 100 crores that we have invested." So it's been fascinating. We are excited to be partnering in with some of the best funds in the country. You have some of the names that you know very well, like Bloom and a few others that are in the making. Over a period of next, I would say 90 days, we should have another few hundred crores invested where we are in active conversations.
Okay, you've crossed this 100 crores in AUM as of the December quarter, and you've already deployed this in some funds. You're telling us you're going to do more, and that includes Bloom Ventures. What are the other funds? Any names you could share with us, and the average size of investment that you're looking to make?
Maybe just hold your breath. Give us a few months. We will be more than happy to share some of the names with you. But what we are trying to make sure is we are partnering with some of the best in the space. We truly believe that the segment is in itself a very complex segment. It's huge growth, very nice returns. The market's been performing way above the public markets, but at the same time, it's very complex. It's a very dense and opaque sector. And therefore, we are in a very calibrated fashion making some of these investments. So we would like to not disclose the names as we are in the process of investments, and just another few months, we should be done with most of them.
Well, we'll wait to hear more of those names as and when you're ready to disclose them. But, you're targeting now 1,000 crore AUM this year. And you're looking to invest in 8 funds and about 20 by June 2025, actually. Is this funding already tied up? Are you broadly looking for these, what are you broadly looking for in, these funds when you sign the check?
Yeah, so what we're looking for, if I keep it at a very high level, Ritu, what we're looking for is that we want to make sure we're dealing with fund managers who've been at least in 3 funds or more. They are able to demonstrate a track record over the last 3 or 4 vintages, which have crossed several economic cycles. We've seen many ups and downs in the last 10 years or more. We want to make sure that the fund managers have demonstrated the ability to tide over those cycles. We also want to make sure that the teams have stayed together, because a lot of teams have delivered performances and then disintegrated. For us, it's extremely essential that teams are together, because it's a sector and it's an industry which needs the team to come together and deliver. So those are some of the few factors that really hold us well. We're fairly sector agnostic. We're very comfortable with all the various asset classes inside the private markets. You took some of the categories like VCs, private equities, venture debts. We would also be investing in some private credit funds. And we're also fairly comfortable with these being across sectors of the economy, from tech to industrial, manufacturing, financial services, climate and energy. So those are some of the ones that we are very actively looking at as we speak.
Okay, so it's practically across sectors. I know it's early days yet to ask you this, but what are your expectations as far as returns from your investments are concerned? And, what do you make of the current environment in India for an investor from a returns point of view?
Yeah, so Ritu, you know as well as I do that we were in a funding winter last year. It was the macro environments were fairly complex for anyone to navigate. We were on one hand seeing a large part of global capital moving back to its home bases, whatever they might be, Europe, US, etc. What held India largely well was domestic pools of capital. Domestic pools of capital held the public markets. Domestic pools of capital also held the private markets. So that's on the supply side of capital. On the demand side of capital, where the end use was going into startups, predominantly startups or SMEs in the private market space, because that's the segment we're talking about. In that segment, just fundamental returns have been above the GDP returns. And it's not surprising, right? If the GDP is growing 7 to 8%, you and I would be surprised if the private sector is not growing at least 15%, if not more. So if you just add on top of the productivity, efficiencies, certain sectors growing faster than the rest of the economy, I think it would be very fair to expect performances north of 20% on net rupee terms. And that's what we target when we are making these investments. We definitely want to be able to tide over that number.
All right, Rohit, we've run out of time, so we're going to leave it at that. Thanks very much for joining us here and giving us your time on CNBC TV18.
Thank you. Thanks for having me.
With that, it's a wrap from Ritu and me on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.